Thanks for joining us. I'm Marlon Bowling with you, your tour guide to the ag commodities. Well, we're going to be taking a look at the setup for today's trade. And of course, yesterday was a big day to the upside in many of the ag commodities. We are joined by Brian Hoops, and he is the president of Midwest Market Solutions, and he's based in Springfield, Missouri. All right, Brian, a big day yesterday. Especially on the wheat market. That was fascinating to watch as it just continued to just climb and climb and climb and climb throughout the day. It wasn't one big spike move. It just kept climbing through the day. However, now on soybeans, at exactly 1:15, they had a 10-cent jump in 1 minute right before the closing bell there. And that seemed to be a bunch of market on close type orders that hit the market there. And it ended up about 30 cents higher. Corn was up about 20 yesterday. Let's take a look at some new information that just came out from USDA. We have more export sales to talk about here, Brian. Again, it's a sale of soybeans. Again, the buyer was China. Again, it was 132,000 tons, just like yesterday. And again, they don't want it until the next marketing year. That's starting to be just a little bit concerning here that they don't want anything for near-term delivery. Why is that?
Yeah, I think it is, Marlon. A little bit of a concern to the trade that we're not seeing a lot of fresh export business for this old crop, and maybe it's a case that they have enough supply to get them by, or at least enough booked to get them by for this next year. But they're certainly concerned about next year's crop, and that's why they're stepping in and being so aggressive right now. It's basically a free look at the market, a kind of a call option, if you will, at next year's prices. If prices are a lot cheaper than what they are, they can cancel these sales and go with the cheaper price. If it's not, then they step in and go ahead and keep these on the books. So kind of, as I said, a free look for China at these price levels, but it's encouraging that they are making additional purchases. Our export inspections yesterday for corn were marking year high, so that was encouraging and helped to rally that market. But you're absolutely right. It felt like there was some funds or some elevators or someone that was kind of short on the futures and did a lot of market on close type orders to rally the soybeans real sharply into the closing bell yesterday. But we're higher again overnight as palm oil futures are hitting contract highs. That gives us strength in our bean oil futures as well as soybeans and the entire soy complex. So we may see some correction or some profit taking because of weather is improving, but overall it looks like the pattern, the trend will continue to remain higher.
So let's look at the overnight Globex trade here. We did have a higher trend in the soybeans. On the corn, not so much. We had March corn down 2 3/4. We were at 672. It was a very quiet trade overnight, with the March only about a 5-cent trading range from the high to the low. May was down 1 3/4 at 670 3/4. December down a half cent. By the way, I wanted to ask you, March, I believe it goes into delivery next week, right?
Yeah, the March contracts actually, as of the close of this Friday, you can be delivery. We encourage anyone holding long March positions to be out by Friday's close. Deliveries notices are posted over the weekend for Monday, and kind of running out of time on those March contracts.
So already a lot of the volume has shifted out to that May contract. So with that in mind, let's go on to the soybean trade and look at the overnight session. Here we had some good gains. You had the May contract 13 3/4 higher at 1648 3/4. And let's look at that new crop November contract overnight. Well, here on the new crop month, you had it trading at 1479.5. It was up 6 1/4 cents. Now in Chicago wheat overnight, you had the March contract up 4. May was up 3 3/4 at 856 1/4. Let's go to Kansas City, and there you had the May contract 2 3/4 higher at 889 3/4. And in Minneapolis spring wheat, May was 2 1/4 lower at 985 1/2. All things considered, relatively quiet except for the soybeans overnight. We'll come back and talk livestock with Brian Hoops in just a moment. Well, now let's talk a little bit about our livestock trade and the setup here for a Wednesday. It feels like a Tuesday, but it is the middle of the week here. And let's go back to Brian Hoops of Midwest Market Solutions. Brian, I was checking the wire here a little bit ago. I was searching for cash cattle market activity out there, and I couldn't find anything. Did you?
Yeah, there's really no Packer bids surfacing yet. The show list numbers are about 244,000 heads, so just slightly larger or smaller, excuse me, slightly smaller than a week ago. But we are seeing some Packer bids. Hopefully will surface sometime today. Now the asking prices out there, 144, 145 on a live basis, a couple dollars higher than a week ago. And outlook for the cash markets right now steady to a little bit firmer here as we go into the end of this week. We expect to see a little bit firmness once again. Boxes trying to firm up, but really it's going to depend on our slaughter. If we have a big Saturday slaughter, if those boxes kind of remain on the defensive, or if they start to tighten up just a little bit, if we do reduce our slaughter for this week anyway.
Well, let's look at how we closed yesterday for a point of reference. We'll go to live cattle, and our quotes are provided by bar chart here. On the live cattle board, we did have the April contract 15 cents higher. We had June up 40. It was a 141.90. Now let's take a look at the feeders yesterday. On the finish, we had the April contract $1.72 lower at 169.12. And most analysts give the feeders a pass just because of the sharp gains that we saw in that corn market yesterday. The first 3 months were over $1 lower. And lean hogs, they got up into new contract highs again, over 112. The April was at 112.07. That was up 267 on the day. What are the odds that they can add more new contract highs today again?
It's been pretty much a parabolic run for that hog market. If you're a producer, I think you have to look at just the steep ascent that they've had and wonder if we can maintain this, or we're going to have some sort of a major correction. So at some point, I think there's going to be quite a bit of selling, or at least hedging, coming into these hog markets. Just ideas that we're not going to be able to sustain this upward momentum that we've had for so long. We may start to see some spread activity as well against the cattle market, as the cattle market has really not kept up with this rally, and ideas that the supplies for cattle going to be very tight going into this summer, and that we get past Friday's cattle and feed report, we may start to see some of that activity.
Only about $30 apart from live cattle to lean hogs these days on the futures board. Interesting stuff. Brian, thanks for the help this morning. Appreciate it, sir. Take care of yourself. Brian Hoops of Midwest Market Solutions. We're about ready to get things underway at the bottom of the hour. Janet, back to you.